Hello everyone, Dave Landry here from DaveLandry.com, and this is your Daily 5. Once again, I am super excited about stocks and super excited about crypto. Even though they've lost a little steam since the last show, I still think they're both looking great. So let's dive right in. Let's talk about Landry Light and the S&P 500. Landry Light is simply lows or greater than the moving average, and this indicator down here, or as I call it, illustrator, just counts the number of bars. The lows are greater than the moving average. I'm amazed at how well this works, and I'm not bragging about my indicator, which is free, by the way, with the ACP plugin. I'm just genuinely amazed that this could work so well and can help to keep you on the right side of the market. I have a buddy of mine, and he doesn't want to learn anything about trading, but then he wants to buy stocks, and he's always calling me and asking me for my advice. And a lot of times, like yesterday, for instance, he called me and said, hey, I want to buy DJT, which has gone sideways for weeks, if not months. And I said, look, buy something like the Qs. You want to buy something that's going up, or has been going up, I should say. And while you're doing these things, and he just retired, so I know he has time. So I said, why don't you just take a few minutes and open up a Stockcharts account and plot your 30 EMA, and then also learn a little bit about Landry Light. Load the free plugin, and don't buy anything that is below the 30 EMA. And I am shocked at how many times that simple little rule will keep you out of trouble. I'm not saying you're going to print money with that little rule, but I can almost guarantee, all but guarantee I should say, there's no guarantees in this business, but I can all but guarantee it's going to keep you out of a lot of trouble. And if you look at something like the altcoins, many times these things will drop below the 30 and stay below the 30 for a long, long time. And some of them will lose 50, 60, 70, even 80 or 90% of their value. And never during that entire trend do they pop back above that 30 EMA. So that one little rule, if you didn't know anything about trading, that one little rule will keep you out of a lot of trouble. Anyway, you can see 90 days of upside Landry Light. As I preached, this is not measure the magnitude or anything of how far the price is away from the moving average. Maybe that type of analysis has some merit. I'm not really into overbought, oversold type of analysis, other than I do trade pullbacks, which you could argue that in an uptrend, the market is oversold to the downside and due to back up. A little bit of reversion to the mean in the direction of the trend. But anyway, nice trend in a piece for a long time here. As you can see, it doesn't mean that it's the end of the road when Landry Light ends, but you might want to get a little bit more cautious when that does occur. Now, I want to update the TFM 10% system, and the idea of this system is technical analysis 101. If a market becomes questionable, it's likely to become more questionable. Now, questionable I define as a 10% or more drop from the 50-week closing high. And borrowing a term from Ian McActivey, the designer's intent for this system is to avoid so-called, as Ian calls them, diaper change moments, or used to call him. He's a great guy. No longer with us, but fantastic guy. Anyway, one of my clients pointed out, a guy named Jeff, that when you get more than 5% away from the 50-week closing high, you might want to think about getting out of the market. Now, you're going to have a lot more whipsaw, as I've been preaching about this ad nauseum, if you do get out at 5%, but you're definitely going to get out of the way early. And by the way, this silly little system would have kept you out of every bear market in history. No guarantees again in trading, but so far, and I forget exactly when I published this, but it's been out there for probably at least 5 years. And during those 5 years, it's actually worked fairly well. Now, keep in mind, by the way, with market timing, you're not going to be buy and hold when the market implodes and then comes straight back up. Okay? But what will happen is it will get you out of the way when things begin to worsen. For instance, during the pandemic, the market dropped 30% after this signal, and it was a little bit slow to get back in. It got back in right around the area where it got out. Now, you could argue that that signal was a whipsaw, but I knew some people personally who were really sweating bullets when that market just kept going down day after day after day. Much better to be able to sleep at night and lose some opportunity costs than lose up to half of your retirement. And the old hedge fund adage comes to mind, he who fights and runs away lives to fight another day. Anyway, the sell signal is up here. I'm not going to spend a whole lot of time on this because we've talked about it so much. But there are the rules in case you want to follow along. And basically, if you're more than 10% away from the 50-week closing high and you close below the 50-week moving average, the 50-week moving average in this case is a whipsaw filter. And speaking of whipsaw, this signal turned into a whipsaw because we got a buy signal a few weeks later. Now, I hate to quote Greg every week, but it makes so much sense. Whipsaws are frustrating. Bear markets are devastating. You could survive frustration, but you can see we've got a sell signal here, and the market has ran about 16% since this buy signal right after the sell signal. So just to clarify, we had a sell signal here, close below the 10% line, okay, and close below the 50-week moving average. The buy-side signals are a little bit more stringent to help avoid whipsaw, just in case you get a sell signal and then the market comes straight back up and then rolls back over again. Before you know it, you could end up chasing your own tail. So I'll put a little whipsaw filter in there. And by the way, if you are going to use whipsaw filters, and you should, obviously, if you're designing a system, then just make sure you don't use too many of them and keep that really simple, just like the system itself in this particular case. If you put too many whipsaw filters in, you have effectively curve fit your system to the prior markets, and believe me, future markets will not look anything like that. And I learned that 20-something years ago when someone contacted me to start a hedge fund. They thought they had the Holy Grail, and basically all they did was grail fit their system to the past 30 years of the market. And I guarantee you, well, I can tell you for a fact, the next few years did not work out as he thought they would based on his research. A lot of times, the map is not the territory, but if you develop something that's conceptually correct, then it should hold up over time. Anyway, 2 bars of upside, Landry Light, again, lows greater than the moving average, and you close within 10% of the 50-week closing high. So just to recap with these zones, this is within 5% of the 50-week closing high. As a general statement, the market is doing really well when it's within 5%, and you don't have to worry about it too much. Find something else to worry about. I'm sure there's something else, right? When it's more than 5%, that's a bit of a caution zone, and then obviously 10%, it's usually a good idea to start thinking about getting out of the way. But anyway, here are the NASDAQ Qs. And I thought it would be fun, I know you would party with me, to just buy 100 shares for S and Gs based on this signal. And this has actually turned into a fairly decent trade here. It's going a lot further than I imagined, 20-something% over a fairly short period of time. So I bought in at $319.49, just 100 shares. And the mark-to-market based on the screen capture was $443.04. So that's $123 and change of open profits, which comes to $12,355. Now, again, I was just doing this for S&Gs. This system does not have money management built in, and I did that on purpose. I just made this a pure system, and as a general statement, as I've said quite a bit, I'm not a mechanical trader. I've developed many years ago thousands of mechanical systems, but I guess all that testing has made me more of a discretionary trader. However, in this particular case, I thought it'd be fun, and again, I know you're a part of me, to follow it mechanically. Now, here's the scary part, because I did not build money management into it. If this were to stop out, at least right now, you would lose more than 61 points. At least I would lose more than 61 points on the trade. So that's $6,000 and change. Something I don't want to do, but I'm going to try best I can to follow the system mechanically just to see how it all shakes out. Now, the good news is, due to the drop-off effect, as I said, I believe last time, the moving average is catching up to price fairly quickly, about 2.5 points a week. But still, that's a long, long, long ways away and a lot to give up. And the reason I want to show you this sell signal so far away is longer-term trend following. You have abysmal drawdowns, and your accuracy will be really, really low as a general statement. You'll only be right about 20% or so of the time, and your drawdowns, again, are going to be abysmal, and that's why you don't see a lot of the turtle traders around anymore, because they were longer-term trend following oriented. Now, the way I've solved for that, without going into a lot of details, if you watch the Trading Simplified shows or subscribe to my YouTube channel, DaveLandry.com, I'm sorry, YouTube.com/Dave Landry, you can learn a lot more about this. But what I do is I get in for a swing trade on a position, I take partial profits, and then I trail the stop higher and then gradually let it loosen up over time. And that helps to mitigate the drawdown, and it makes the accuracy a little bit better because we're getting a few swing trades out in the meantime. Anyway, let's shift gears and talk about Bitcoin. We have lots of Landry Light, or at least we did in Bitcoin, and then it pulled back for what I call a Landry Light pullback. You want about 20 days or more of upside Landry Light, and then look for a pullback to the exponential moving average. I'm shocked at how simple this little setup is and how well it can work, especially in a market that's trending. And right now, knock on wood, Bitcoin is trending. By the way, in one of my previous Daily Fives, I think it was on February 27th when it was published, so I actually recorded it earlier than that, Bitcoin was 50-something thousand, and somebody commented today that, oh, this guy's a little late to the table. And then he made fun of me, so made fun of my appearance. So I pointed out that I love it when somebody criticizes you and they use bad English. This guy's an English teacher, so I pointed out that he used bad English, but I digress too far. But anyway, the point is, it's gone from 50-something thousand to 70-something thousand, so that's a 20-30% run since I mentioned it, and he was criticizing me as being late. If I can get 20% out of a trade, I'm a pretty happy person, so I consider that a success. But the point I'm trying to make, believe it or not, I do have one, is that in trend following, a lot of times you'll feel like you're buying too high. I remember when I bought Bitcoin at 18,000, and I felt like the biggest idiot in the world. But that's what trend following is all about. You don't know how far it's going to take you. That's why you follow along with the trend. Anyway, nice little pullback to the 30 EMA. And also, by the way, notice that in the Landry Light, and as I said last week or week prior, don't just buy a market because you have Landry Light, okay? Because notice, like back here, even though you still had plenty of Landry Light, the momentum had slowed and it had gone sideways for 6 or 8 weeks. So just an FYI, make sure you look at the chart. In this particular case, notice that the market took off, consolidated, and then took off even faster. In other words, it accelerated higher before pulling back. So that's another one of my setups I call an accelerated momentum strategy, or accelerated momentum setup, or accelerated momentum strategy, I think was the original name. Anyway, so looking at that pullback, I went back and I rewound the, I went back and looked at your Daily 5 when I recommended this as a pullback, and I said a plausible entry would be about 70, stop out around 60,000, and then broadcast that up for about 80,000 would be your initial profit target. And so far, it really hasn't done much since that trigger, but it'll be fun to watch. Again, you want to party with me, right? Ethereum was set up last time, and here's a chart from last time as a Landry Light pullback. Nice Landry Light. Again, look at the chart too, and notice in this case it had a lot of persistency. I would urge you to go out and study persistency in markets. It's one of the most amazing things, and persistency is just a market tends to go up day after day after day after day. If all you did was trade persistent and ideally accelerating markets, I think you do really well as a trader, provided, of course, you sit on your hands when they're not persistent and accelerating. So let's follow up on this. And once again, not a whole lot to get excited about there. You could see the entry was here, and it just hadn't done a whole lot since, but it hasn't stopped out either. So let's just see what happens with that. And by the way, I did not give an actual entry, so I'm just going to assume that a fairly tight entry was used right above this high in that particular case. Now, in the altcoins right now, because the market is so inefficient, I would encourage you to go out and trade these Landry Light pullbacks. Don't bet the farm. A lot of these things are going to zero. That's one of the few things I can guarantee. But in the meantime, you might be able to catch a pretty good ride with something as simple as a Landry Light pullback, or pullbacks in general. So you can see this market took off, accelerated higher. And by the way, I am long this. I was long before last week when I talked about it. But anyway, so far so good as far as that pullback is concerned, and I'll continue to follow up on that. Now let's shift gears back to stocks. Let's talk about the pullback of the semiconductors. You can see lots and lots of Landry Light, and then it pulled back, not quite to the moving average, but close enough. If you're newer to trading, maybe trade these things at a slightly more mechanical manner. Yes, wait for them to pull all the way back to the moving average. Once you get a little bit better at trading, then you can start trading more generic pullbacks like this, where you have a market that's in a nice uptrend, a very persistent uptrend too, and then look to trade the pullbacks, even if they don't quite make it to the 30 EMA in this case. But you can see it did gap higher, so let's say the trigger was here, and so far, again, it hasn't done a whole lot. Now, these things haven't worked out great since last week, but that's what trend following is all about. If markets didn't consolidate and trade sideways here and there, and if they never corrected for that matter, then there would be no more markets. That's what makes a market, the buying and selling. So I think the pause that refreshes, so to speak, as these markets consolidate a little bit, especially at these high levels, helps them to make a new leg higher. Well, that's it for today. I want to thank everyone for watching. If you have any questions, you can reach me at dave@davelandry.com. Here's all my contact information. I'm on X, YouTube, TikTok, Facebook. Now, I do have a Facebook group. We have a bunch of great traders there. I get a lot of good information from them. I get a lot of good setups from them. The only caveat is you do have to be a paid member of davelandry.com to join the group. The group is free, but you have to be a paid member. So again, I want to thank everybody for watching, and may the trend be with you.